The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got the S&P sitting basically right at 4,000, down from about 4,100 just a few days ago. Yesterday, quite a day to the downside. Let's put things on a 5-minute to check out the action. You talk about an acceleration, man. You got a lift for a brief period of time of about 10 S&P points from early in the session. 10 o'clock until about 11, and boom, then it was on. From 4,040 down 50 points to about 3990. You are already in negative territory, and all we've done is chop around at that area overnight. We're sitting basically near the lows of yesterday, sitting just at 4,000 in the S&Ps. NASDAQ 100, we're positive by 12 right now. You got the Dow negative by 48. You got the Russell negative by 1. Bitcoin, I'd say sitting pretty respectively at 17,000. Article out there that Goldman picking up some Bitcoin assets at bargain prices. What are those prices as they're talking about in the den? I'm not sure. But you know what? I'm sure there is some value, folks, when you have a collapse like you have going on in the crypto sector. Not sure how Bitcoin's still hanging tough at 17,000. But nonetheless, you got Ethereum hanging out at 1250. We jump over to commodities. Gold contract, quite a day to the downside yesterday. Gold up $8 so far on the session at 1790. You got silver this morning up 16 cents at 22.58, but silver off $1 from where it was Sunday night. And we jump to notes and bonds. Right now, positive by 7 ticks on the 10-year right now at 114.02. And they were just talking about in the den, our man Jimmy, the 210 yield spread, 82 basis points, man. Watch out on that basis point spread in the 2 and the 10. The 30-year up 28 ticks at 129.22. We jump over to the volatility index this morning. 2058, so much for 1895. And all things considered yesterday, you could see this thing rise even more on some days when you see the escalation in the markets like we did. I mean, if you look at where we are, right, you're talking about trading where we are, 2057. You're just right back to where we were at about 10 a.m. yesterday. In correlation to the market, S&P is about 40 or 50 points below where we're trading at that price point. So 2057 on the VIX. You got to jump around to some of the currencies. We had some movement yesterday. You had a stronger dollar yesterday, putting a hurting on some of the commodities. You saw gold, right? Today, dollar basically flat. You're technically down 16 ticks. We're above 105, 105.12 right now for the dollar. We jump over to the euro, US dollar, 10. Is that right? 105.13. Look at that. The dollar index and the euro are at identical prices to the almost thousandth. The dollar index at 105.129, and the euro dollar is at 105.135. Just a coincidence, but what are the odds of that, man? You jump over to the dollar yen, and we got the yen trading at 136.47. Going to be an interesting day in the markets, I imagine, man, as this market just continues to digest everything going on from Wednesday, everything going on from Friday with the jobs number. Pretty remarkable that yesterday you gave back the entire move of the jobs number. On Friday, you had the S&P trade from 4,080 down to 4,010. You get it all back, and they said, hey, welcome to the trading week. Next week on Monday, we're going to give it all back and then some. I mean, look at the move, folks. You're talking about from where we opened Sunday night to where we closed out almost yesterday of about 80, almost 2% where we are. And I may sneeze here. Nope, it may pass. We'll see. All right, I'm going to start off with the S&Ps. So, a little bit of a dicey area here, man. You know, I was saying to myself, just thinking, little internal thought, okay? When the jobs number came out on Friday, when you had the wage growth, you had the instantaneous spike down from 4,080 to about 4,000. It recoiled. I said, man, I don't know. I said, if this thing gives this up pretty quickly, that would probably not be good for the market. And boy, it took one day to give it all up, right? So you take a look at the S&P, folks, okay? You go back to the beginning of the year, 4808. This recent uptrend that we've been in, since the spike low of 3502 on October 13th, the S&Ps have risen from 3,500 up to above 4,100. That's a 600-point run on a 3,500-point index, okay? You had the Dow. Man, the Dow made it into bull territory, folks. The Dow went from 28,600 up to 34,006. That's 6,000 points in a 28,000, more than 20%. So the Dow had entered a bull market. Okay, it happened, 20%. That's the definition. Back to the S&P, though, what I'm going to look at is a few Fibonacci numbers. Not exactly indicative of a bull run right now when you just keep getting up to a 618, and all that does is set up the next leg move down. Now, where have we chopped around recently? At the 618 of the move lower from August to October. Now, it's an art, not a science, technical analysis, folks. I've chosen to put the bottom of this trend on all of the bodies that really represented kind of a low here of about 3,600. Yes, you got that flash low to 3,502, okay? But by the end of the day that day, you were up at 3,700, okay? But you did chop around there. Point being, yeah, all we did was come up to the 618. Now you say, okay, that doesn't work every time, and it does not work every time, folks, okay? But here's what I'm going to point out real quick. What has each bull rally within this bear market been? Okay, we'll start off on the first one, 4808. We're going to throw a Fibonacci number on here, and we're going to go to the first acceleration. You trade from 4808 down to about 4,200, 4,150, something like that, okay? But cherry picking that area, you did get above the 618, but you can kind of see that there was a little bit of consolidation right at the 618 here, okay? And you almost did it twice, right? Because you came down, you got to the 618. On that same trend, you came down to a similar area of about 4,200, and you got back to the 618. And then, boy, it was quite a move lower, okay? Now, I'm going to take that off because I put all these on the chart, and it gets a little bit disturbing in terms of how many lines we got. The next acceleration, from the highs of late March down to the lows of June, and then you accelerate higher into August, what'd we do? We got right to about the 618. Yeah, you got a little bit above it, okay? You chopped around in that area, and then you traded lower, okay? So we have one move lower for the first couple months, and then you trade to the 618 into late March. You have a second move lower from basically April 1st down to June 15th. You trade back to just above the 618. Right? And then what did we just do, folks? Whoops. Let's take that off. And you know where I'm going, okay? We just did the same thing, man, okay? All we did was get back to a 618. Fool me twice. Shame on you. Fool me twice. Fool me once, shame on you. Fool me twice, shame on me, right? Is that how it goes? I think so. Nonetheless, that's all we've done. And if history repeats, folks, we did it once, we did it twice. Are we going to do it 3 times, man? Okay, don't think that a 618 move of the previous move is somehow indicative of some super strong bull. All we did is a 618, and guess what? The first time, yeah, that preceded a 1,000-point S&P collapse. The second time, that was a run of about 700 points on the S&P, okay? And that first acceleration was about 600 points. 600, 700, 1,000. Dicey area, folks. Stay tuned. We got a lot to talk about. We'll be right back in 3 minutes, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now. We're up by 1. NASDAQ futures, NASDAQ 100 up by 18. The Dow negative by 19, digesting some of the action from yesterday. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your hosts, Kevin Hincks, Tom White, the whole team, folks. They break down the day's market action. They got some great guests. They walk you through hypothetical trade setups, all of them using options, all of them using defined risk. And, man, we got quite a fast market yesterday. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. You know, I would describe this market this morning, Tommy, as quiet. It's a quiet week for economic data until we get PPI on Friday. It's a quiet week for earnings until we get a bunch coming out on Thursday with Costco and Lululemon and DocuSign and Broadcom. It's the Fed quiet period. Futures are quiet to start the day after a pretty big sell-off yesterday. So I would describe the start of this trading day, Tommy, as quiet.
It's kind of the quiet after the storm and maybe before the storm, man. We'll find out, man. Quite a day yesterday. We haven't talked to you since Thursday, Kevin. Quite a few days of trading in the market. What did you think of the general action, Kevin, of Friday on the jobs number, the wage numbers in there, of course? Quite a recoil. The market, I got it up here on the Thinkorswim platform as I'm chatting with you. It spikes lower on Friday. We get it all back basically by the end of the day. And boy, by yesterday, we were actually below the lows of Friday action. What's your general take on that type of market action following the jobs number on Friday and, of course, following Wednesday's action as well last week?
Yeah, I thought that Friday's price action was very resilient for this market as they tried to decide if that was a one-off or how important that was. And then, Tommy, we got, it was a down open yesterday even without economic data, right? We were down to start the day, but then ISM came in stronger than expected. That whole leisure and hospitality sector of the U.S. economy is staying strong, and resilient. And then we got factory orders that were higher than expected. And I think this market came to the conclusion this market is stronger than we'd like it to be. And I'm sure Jerome Powell, with payrolls, ISM, and factory orders, didn't like the trend of that economic data. And the market got hit pretty hard yesterday because of that. Now, it's quiet to start the day today. If you're looking on the bullish side, the good news is the dollar's lower, yields are lower, and crude oil is significantly lower. So there's three good things to start the day. We'll see, though, if they wait for more economic data in earnings and data later on in the week, Tommy. But certainly a quiet start to the day.
It's pretty interesting, of course. We're coming into the holidays already, man. What do we got? We got 19 days until Christmas. We got a Fed meeting, of course, in between there. Kevin, as we approach the end of the year, and normally there's a few variables that come into play, of course. You can have, whether it's the tax selling of things, not sure that's going to play in as much this year, although, of course, there's going to be pockets that have done very well in this market. But when you look at the end of the year, Kevin, right, I'm trying to, figure this one out myself. Of course, we have the Fed. That can provide some volatility for us next week. You got some earnings coming up, as you mentioned, on Thursday, some big companies out there. But what's your general take of how this market may come in? Sometimes you'll see kind of the calmness come in as everybody, takes a couple weeks off. The kids are off in school. What's your general take of what you're looking for as we come into 2023, man, which is remarkable, like 3-4 weeks away?
Yeah, I think, a lot of what we're going to see for the next couple of weeks is going to depend on Jerome Powell on December 14th. What he says going forward, how he describes his coming from 75 basis points to 50, if he does, right? Some of the economic data, a little worrisome in terms of that overall. I think it's now a 80% chance of 50 basis points, about 20 for 75 basis points. I think that'll melt away. I think Jerome Powell's already set the tone that he wants to lighten the touch here a little bit on interest rates. But, Tommy, he's still got to tell us, the good news is PPI data coming out later in the week. It looks like the year-over-year numbers are going to come down. The consensus is from 8% to 7.2 in the year-over-year headline. From 6.7 to 5.9 is the consensus on the core. If that plays out, Jerome Powell might have a good story to tell at the end of the year, Tommy, especially since we've done unprecedented things to interest rates to try to slow down the economy, and it's starting to work. So if Jerome Powell, here's what I think, and this is important, Tommy. Charles Evans said something that was really significant. If we can get to the point where we think 6 months from now that the market, the overall inflation look will be better, then the market will look favorably on that and buy dips again. It's that 6 months. We can get to that 6 month window where we think we're going to be better. This market might start firming up here as it has done already, as you know.
And when do we get to those 6 months, Kevin? No, I'm kidding. Of course.
I don't know.
Right? That's
no
the
idea.
question.
Yeah, exactly right. When? Tommy, that's the million or billion-dollar question in these markets. When and from what price level do we start to move? That is the question that everyone wants to know.
And it's great points because I'm learning so much in this market over the last 2 or 3 years with the volatility and the way that everything is so related, man. And I know it always is the case, but the moves we're getting is just dramatic, as we all know. And I'm really getting to see and understand how so many, whether it's, interest rates, yields, currencies, of course, the dollar, and then you got growth stocks, multiples. My goodness, how they've been trimmed in many scenarios, growth stocks especially. The S&P's sitting at about 4,000 right now. I found it interesting, Kevin, when you were looking at on Friday, whether it was the Fed estimates, right, the implied rates of the Fed. So you saw things go up maybe a little bit on Friday. But what's so interesting is that when you get into 2023 right now, the implied rate really is looking for maybe some cuts. And I'm going, really far into the future. When we talk about 6 months, it's almost impossible as we chuckle here, saying, when does that happen? But what is your general take? Because I look at that and I say, that's like almost, in my opinion, okay, this is my opinion, folks. Opinions come into thing. That's a pretty good bull case right now that the Fed is going to start cutting somewhere, even anywhere right now in the next 12 months, when really all we're doing is going from 75 to 50, Kevin, and the chairman keeps saying he's going to keep it there for a while, and we know how that goes. That doesn't mean they're gonna, because things can change. But what's your general take on that, the market implied rate versus what the Fed has been saying? I mean, I know that's a billion-dollar question as well, man, but what do you think of what the market's implying for some of those rates next year?
Yeah, I think if they come to a point next year where Jerome Powell has to lower rates, I think that will show that he made a mistake in some of his policies this year. If you're Jerome Powell, your goal would be to get it to a moderate level and leave it there and let it work against inflation. If they overcorrect and then have to lower rates next year, which some of the data says, I think that's absurd. That would mean Jerome Powell overcorrected in the market, Tommy, and that wouldn't be great for the market. That would mean a abrupt and significant slowdown in economic data and the economy in general, and that would be not a mild recession but a hard recession that would cause him to lower rates. So I think if the market pricing in lower rates, that's a problem.
It's a great take. That's why I asked the question, man. And yeah, I'd be surprised, and we'll see where we go. Kevin, I appreciate the time, man. We'll be watching at 12 o'clock today, and we'll talk to you tomorrow, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in Fast Market at 12 every day. We'll be right back for the open. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at markets right across the board, but barely. S&P's down by 4 points. 39.9950 is the S&P futures right now. NASDAQ 100 negative by 7. You get the Dow negative by 31. You get the Russell sneaking into positive. Nope, it's red by half a point right now. Bitcoin up $160 at 17,000. Crude down 49 cents. But boy, quite the day yesterday, man. You were just at 82.50, and boom, you're down $7 in the span of 24 hours in the price of crude, man. From 82.50 to 75.50, we catch a little bit of a pop since 9 a.m. Eastern time, just in the last half hour or so. You see the volatility continuing in that crude contract. We jump over to gold. Gold up about $6 right now to 17.87. And let's jump back to those currencies real quick. Keep our eye on the dollar. Dollar index right now, barely negative by 8 ticks, sitting at about 105.21. All right, let's jump around and see what else I have pulled up in terms of the action going on in the market today. Where are we going to begin? Let's see. All right, what do we got pulled up here? We got a lot, folks, to talk about. This is an interesting one, okay? Where's the action, folks? The action, the meme action, the Wall Street bets action, they're turning to distressed debt. That's where volatility, man, might be the best play. And they talk about in this article, it's a Bloomberg article. Now, this is out there yesterday, but I did find it interesting in terms of where, and this is something that we should all be thinking about, which is why I want to touch on it real quickly. Bed Bath & Beyond, okay? You want some action at the tables, folks? How about buying some retailer bonds that don't mature for 12 years in Bed Bath & Beyond? You do that, you're paying 17 cents on the dollar. And this is where some of the action is in terms of the Reddit forums where retail traders have come to swap tips and research on debt. Debt, of all things, might be the volatility as we see. You know, where yields are, folks, it's quite a conversation, man. When you look at, I mean, if you have cash, folks, number one, first things first, okay? If you have any cash sitting there, whether it's in a bank account, I'm telling you, you got $5,000, you got $10,000, you got money that's just in there for a rainy day, make sure you are earning a return on that capital, because right now you're looking at money market funds that are pushing about 3.4%. That's just a money market fund, let alone you go into a 3-month CD, you're pushing 4-something%. You go out 90 days, you go out 6 months, you're pushing 5%, okay? There is a real conversation that equities have a real competition from yields right now. Now, that's not always going to be the case. Those are short-term yields, especially as well. The money market funds are basically in repo agreements, a lot of them, okay? So that is going right with the Fed. So if those hike up, they may continue to rise. They rise in December as we get a 50 basis points. They'll rise again for 25. Okay, so make sure if you have money and it's just sitting in, whether it's a Wells Fargo account, right, earning basically nothing. The big banks are not paying you interest, folks, okay? They're probably paying you something. They're not paying anything close to what they should, but it really made me think, because that's something that's been on the radar. If you're in a retirement, you're looking at those deals. It's a big deal when you start earning 4 to 5% guaranteed, folks, because if this market stalls, right, and you look at 1, 2, 3 years out, well, if you're getting 4 or 5%, man, and this market does have a pullback in it, fixed income is going to be a big competition, man, for some of the money that's being pushed into the markets, and you're seeing it with this conversation. Where are they going to? They're going to debt. Yeah, they're going to bonds. They're going to junk bonds, because that's where the biggest gambling action is, okay? You have I bonds out there. That's another one. If you haven't put money into I bonds yet, yeah, you're going to be still getting, what, 6 or 7% as that resets? Quite the number on yields competing for capital when it comes to whether people put money in equities, etc. All right. Let's talk a little bit about this one. So Activision Blizzard, there are a couple articles that have been popping up on this deal. So you have Microsoft buying Activision Blizzard, all right, $69 billion acquisition. There is a distinct possibility that regulators do not allow that deal to go through. The U.S. FTC is likely to file an antitrust lawsuit to block Microsoft's takeover. Seems like they're going to bring it, though, all right? They're ready. This is, I'm jumping around, okay? Microsoft is ready to fight for its $69 billion Activision deal. They have not offered remedies to the FTC. And yeah, you have problems with the EU and the UK. Okay, that's going to be the deal. But this isn't one of those deals that they're going to back down, okay? So we're going to see it play out. That's probably why Buffett stepped in a while back for an arb play, an arbitrage play. He knows that they're going to fight. And he thinks that, you know what? It's worth the risk reward here to be in that stock that it maybe gets done, because they are going to bring the heat in terms of trying to get it done. Now, here's one step already happening, okay? One of the things, and this is rightfully so, okay? And I would argue it probably is anti-competitive, okay? You have one of the best games out there, Call of Duty, which is Activision Blizzard's big game, the biggest of their portfolio. And one of the arguments here is that if Microsoft buys them, they're saying that they will allow that game to remain on PlayStation. But come on, right? Use your brain and understand that if you own a asset like that can drive people to your gaming system, of course you're going to try and use that to your advantage. Now, there is, of course, the other side of that you want to sell that to as many people as possible. But folks, Microsoft is so big that they're not interested in making money off of single game sales. Yes, it all matters, okay? And they're going to make so much money on the next Call of Duty that comes out for whatever years, okay? But they want you in their ecosystem. Okay, and they could probably even offer it at a loss and figure out a way to make money on you long term within their ecosystem. And eventually it would make sense that they said, you know what, that's our game. The Xbox is our system, and we are going to offer that game only on our system. So if you want to play Call of Duty, Microsoft owns Call of Duty. Microsoft produces the Xbox. You can come on our system. Well, what they're doing is they're trying to get ahead of that, and they're saying they're offering Sony a 10-year deal to be on PlayStation if that deal goes through. You're already seeing the slight nuances, okay? So they're not making concessions to the FTC, but they are making sure they're putting out publicly, okay, data points that will allow them to make the argument that it's not as anti-competitive as maybe the FTC is going to argue. This is going to be an interesting one to see how it plays out. Now, I had one more article up here, and let me see if I can find it real quick. Nope, I got too many articles up. Here we go. This is the last one, okay? So 3 articles popped up that I was looking at the last few days. Activision's risk-reward trade-off defies the Microsoft deal doubt. Analysts cite standalone prospect even as deal risk mounts. You got to love Buffett, man, okay? What this article is basically saying is that the market prices in only a 35 to 40% chance the acquisition is completed, but even if it doesn't get done, you still have analysts pushing the stock, okay? Their average 12-month price target is $92.17, which is identical to the prediction on January 17th, the day before Microsoft came out with the takeover. Okay, so whether Microsoft comes over or not, the market is looking for Activision Blizzard to be up at about $92. Now, here's a chart I wanted to go over real quick, okay? That's when the stock was at $65. You spike up to 80 and change, okay? The FTC comes in to probe the deal, expectedly so, when it's trading at 80. It gets near 75, and that's when Buffett comes in and says, this is a risk-reward play that I'm willing to make, okay? Then you have the UK open a probe in, September. You got filings going on. It gets as low as 70. You're at 75. Nonetheless, keep your eye on it, man, because I think no matter what happens, that might be a good deal. They're going to pay $95 for it, okay? But it looks like no matter what happens, man, Activision Blizzard, they are in a good spot. They're a commodity game that everybody wants. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And just like that, we got some negative action with the S&Ps down by 0.25%. You're challenging the lows of yesterday, man. 39.92. NASDAQ 100, you're down 60. I think you just got below the low. The technical low yesterday is 11,745. We're right near that area. Did we actually tick below it? We did. We got to 11,743. Dow's off 22. The Russell is off by 6 right now. Crude, 76.74 right now. And what are we going to jump to, folks? If you want to make 40% on your money, the quickest way to do it is with some Tiger Dollars, folks. This deal, 6 days is all this deal sale is running for, folks. It ends this coming Monday, December 12th. You can get up to a 40% bonus on your Tiger Dollar purchase, folks. If you've never purchased Tiger Dollars before, they're a great way to lock in savings for anything we offer, folks, whether it's newsletters, live trading webinars, full trading education webinars, services, anything we offer at TFNN, folks. Tiger Dollars are good for. They never expire. They're fully transferable. Once you apply them to their account, if you're on a monthly subscription, I encourage any of you subscribers out there, if you're on a monthly subscription, you're thinking about signing up for any of the services right now coming into 2023, please check it out. You lock that in, you add the savings, whether you spend $500, you get a 20% bonus, which is an extra 100 Tiger Dollars, so you end up with 600. You spend $1,000, you receive 300 Tiger Dollar bonus. That's 30%. You end up with 1,300 Tiger Dollars. Or you spend $1,500, you get a 40% bonus. That's a $600 bonus. That locks you in at 2,100 Tiger Dollars. You also get a free Tiger mug, a TFNN Tiger mug, man. Exclusive product, not even sold at TFNN right now, that we'll be shipping out to everybody that takes part in this sale. It's going to go quick, folks. I can't believe that this coming Monday is December 12th. Have you got that Christmas shopping done yet, man? I haven't. I got to get on that. So check out the Tiger Dollar sale, man, as that runs through Monday, December 12th. We only do 2 of these a year, pretty much, folks. I think the last one we did was July 4th, and this will probably be the last one that we do, probably July 4th, something like that. We usually put one in the middle of the year and then one towards the end of the year. Don't miss it. We do it a couple times a year, and if you're thinking about signing up or you are a current subscriber, and I'm always amazed, folks, of the number of current subscribers who don't buy Tiger Dollars. Check it out. We're all in the business of returns. That's the easiest way to make 20, 30, or 40% on your money today. All right, we're going to jump to a little bit of electric vehicles. Now, it's interesting. We got 2 articles over here from Bloomberg. One's an opinion piece and one's a news piece. We're going to talk about, first, the rising battery prices threaten to derail the arrival of affordable EVs. Well, here's the interesting part right now. We got rising gas prices as well, okay? But what's happening? One of the most consistent trends in the electric vehicle industry over the last decade has ground to a halt. falling battery prices have been one of the most consistent trends, right? Technology increases, just like the size of TVs, right? Remember how expensive TVs used to be? Those come down. Well, it's a little bit of a different story, though, when you're talking about EVs, because you need materials that are expensive in a big way. But prices dropped from well over $1,000 per kilowatt hour in 2010 to just $141 per kilowatt hour. Pretty remarkable when you talk about the battery prices and how that's changed. That, one of the biggest factors, jump-starting one of the biggest shifts in the auto industry in the last century. But this trend has ground to a halt. Check it out, right? Basically, all of that happened from 2010 to 2019. Maybe you include 2020. Nothing's happened since 2020. And even from 2021 to 2022, they're going up. Volume weighted average in real 2022 dollars, the price is going up. There are several factors driving it, but the single most important one is the rising cost of materials, including cobalt, nickel, and lithium. The prices for nickel and cobalt have come down in recent months. Lithium may be about to turn. Each of them are still higher than they've been in previous years, driven by the surging battery demand and a lag in how fast new supply can be brought online. So keep that in mind when you're thinking about electric vehicles, et cetera, okay? But we're going to shift to the next art. Now, this is interesting, okay? That's an article from this morning, all right? Just posted at 8 a.m. this morning. And this is an opinion article, okay, out there, Sunday? Yeah, I was reading this over the weekend, I think, Sunday night. And this one's a little bit different because this one's talking about the trucks that they're pushing out, and this one's talking about diesel, okay? Elon Musk's impossible electric truck is getting the last laugh. It's so interesting, though, the dichotomy of these two articles, right? One saying that, and to get it again, right, rising battery prices threaten to derail the arrival of affordable EVs. But this is a different scenario, though, because when you talk about trucks, boy, you talk about getting into the nitty-gritty of the cost of goods sold. And boy, trucking, it is thin margins, man. Wait till you see some of these numbers in here. Batteries as heavy as an elephant are not ideal for long-haul trucking, but non-diesel 18-wheelers may have found their niche. Let's just get into some of the numbers. So a Class 8 semi-trailer with half a metric ton of diesel in its tank can haul 20-ton load for 1,000 miles between refueling. I was not aware of that those semi-trailers can go 1,000 miles before they stop. Was not aware, okay? There's no way that lithium-ion can compete. The 3-ton, 540 kilowatt-hour battery on a fully equipped Volvo AB electric truck weighs as much as a rhinoceros. Tesla is more cagey about its battery specs, but comparisons with Volvo's numbers suggest that the 1,000 kilowatt-hour power plant alone on its biggest semi would tip the scales at nearly 6 tons. That's an adult male elephant just for the battery. Or an empty school bus. Think about that. They got an empty school bus basically sitting on top of the trailer just to power it, okay? Now, there are limits in terms of how much these trucks can weigh to make sure that Elon is out there, the richest man in the world, not destroying the roads all over the country with his trucks, okay? Even with a lighter powertrain, such as a massive battery pack, would make it hard for Tesla to undercut diesel while staying within the roughly 40-ton overall weight limit. So what happens is that when you have that much battery in there, you can carry less goods because you got to keep it under the weight limit, okay? And that is to prevent damage to the roads and the bridges, etc. And this is interesting. Logistics is an extremely low-margin industry. J.B. Hunt, one of the biggest U.S. operators, last year made roughly $1.63 a mile of revenue in its long-haul business, half of which goes to fuel, okay? Make the payload smaller to accommodate all of that battery, or reduce the range to allow smaller batteries, right? Or spend more of the day hooked up to a mega charger. Time is money, and those profits start to look even thinner. But guess what's been happening, folks? The price of diesel has been going up. Now, they just delivered, this is Tesla, okay? Just delivered the first part of an order for 100 vehicles last week to Pepsi. It's 3 years behind schedule, but it happened, okay? You got Volvo, you got Daimler. They had orders for 1,280 of them, okay? But what changed? If Tesla had made dramatic breakthroughs, nope, they didn't make breakthroughs, though, folks. You know what changed? The cost of diesel. It might just be just enough to get those trucks out there, and we'll see what happens as energy goes forward. But this one's going to continue to play out. That's why I thought it was interesting bringing up the two articles, right? You have, number one, diesel, and then you have, number two, the rising cost of affordable EVs. When you talk about long-haul trucking, it's straight-out math, man, okay? When you're making $1.63 a mile, half of it's going to gas, and you're going to put an electric vehicle that is the size of an empty school bus with a battery on it, you better make sure you're making money. But guess what? As they break it down, we'll finish this up real briefly when we get back, because by the numbers right now, okay, an electric rig that's twice as pricey to buy as a conventional vehicle is getting 12% cost savings for every mile, equivalent to nearly $17,000 a year for that truck on electric. We'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets turning negative right now with the S&Ps off 17 points. You get the NASDAQ 100 off 95, the Dow off 41. And boy, just make sure you're positioned and able to handle the swings, folks, if they do happen. I mean, when I went over in the beginning of the show, and if you weren't watching at the beginning, what I really touched on here, let me take off this Fibonacci number real quick, was that we basically climbed up to the 618 of this rally recently of the downtrend that we started from August. And that basically correlates to The rally that we got from the downtrend off the first of the year when we accelerated higher into March 29th, that was around a 618, a little bit above it. This acceleration from June up to August was also about a 618 of the whole move lower from March to June. And now what have we done? We've gotten to the 618. It's not out of the realm, folks, that you get another. I mean, what if this is an A to B, C to D? You're talking about a move from about 4,300 and change down to 3,600 or change, maybe 3,500's in play as you get quite a tail down there. That's a 600 to 700 point move. A 600 to 700 point move off of about 4,000 or 4,100 takes you somewhere in the ballpark of what, 3,300, 3,400. And where does that line up? Well, where does that line up, folks? If you take the move from 2174 up to the highs, what's it going to do? A 618 brings you right down to about 3,200. 618's everywhere in this market, so it's not out of the realm, man. You got the Fed still going to be hiking a week from today, all right, or a week from tomorrow, to be exact. And yeah, all things considered, folks, with everything going on, with inflation where it is, with where the Fed is, with what they're saying, make sure that you are comfortable if you're dealing with retirement, whatever you're dealing with, if that market goes down there. And if you're not, maybe you take some money out of the market, man, and put it on some fixed income, okay? Maybe you put it in short-term CDs. Maybe you put it on a ladder. I'm getting totally away from active trading right now and kind of on retirement planning. But it is something you should be thinking about because, yes, you might be losing money in real terms if you're getting 4% when inflation's at 5 or 6, but you're really going to be losing money if it goes down to 3,200. Listen, the market's going to come back, okay? But make sure you're comfortable with the possibility of those moves because when I see that 618, and not the first time, not the second, it's the third time we've done a 618 bull run, folks, within a bear market rally. And it might happen again. Thanks so much for starting the day with me, folks. Don't forget about Tiger Dollars and stay tuned. We got our man Basil Chapman. He's up next, folks. Have a great Tuesday, everybody.